Welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. In today's session, ladies and gentlemen, we're going to be talking a little bit over the last topic of this month's webinars. Speaking of which, the whole month we've been looking over trading systems and indicators that are only concerning momentum. Today is a session that will also talk about momentum without exception. Of course, as a topic, I have prepared something that will be very, very useful for traders that will mostly focus on 5-minute to 15-minute chart. Speaking of which, we're going to be talking about trend and trend reversals. Also is going to be a momentum trading system that involves 4 plus 1 indicator, which is not as a must to have on the trading charts. Of course, it's mostly as a guideline to check our current market momentum build, and this is the momentum indicator. However, the other indicators are also some of which we've already spoke about, and they're not only volatility indicators, but they're also momentum indicators, which in combination with one indicator which we have not used so far, and I will get you familiar in the next following minutes, gets us to have a very, very powerful trading system, as well as it's extremely simple. So basically we're going to focus on the right now on the 5-minute Euro USD trading chart, as well as we're going to move to a 15-minute chart for some more examples so we can see the performance of this trading system. Sadly, however, the conditions that we're trading on that are focused on 5 to 15-minute chart, we can't really go weeks, months, years back, as we've been looking for at the 1-hour, 4-hour and daily charts earlier in this month's webinars. However, this is something that you can go for on your own when you're at home or at your trading desk in general, so you can track back, see what we're talking about, see if there is any value to your trading plan, whether you can incorporate it in the most appropriate way, so you can profit from the system that we're going to talk about today. Nothing complicated. However, the system that it's mostly used is to combine all 4 main indicators, usually in one window. I separate them in 2, basically because there is a bit more clarity when it comes to trading, because when you put too many indicators in one, there are levels that you might miss during your experience trading the markets. One of the indicators that we've used so far, this is the Commodity Channel Index, a very important index that is measuring volatility. Also the Relative Strength Index, as well as the Stochastic, all of these are measuring volatility and momentum. But the one that is not used so far in our webinars, in our systems, this is the Moneyflow Index. In general, it's also an oscillator. Now let's have a look first how it looks on our charts. Just as an example, the fact that the oscillator is based on volume plus momentum, we have to find it on volumes when you start looking for it. So the function button on the top can bring you down to the all of the oscillators and instruments that you can use on the MetaTrader, but you have to scroll down to volumes and you can find not many that are based on volume. This is the Moneyflow Index, or for short, MFI index. Of course, the settings of that particular instrument today, we will focus mostly on the 13 to 14 period. So I'm going to go for 13, pretty much the best settings for this particular instrument, as long as it's going to work better and on time with the rest of the instruments. And this is how it looks on our charts. Now, so far what we can see is that it's hovering between the 0 and the 100 levels. That gets us to believe that the Moneyflow Index, as an oscillator, uses both like price and volume to measure buying and selling pressure, which means that it is a typical price for each period to gain a particular momentum presented as a curve on our charts. Speaking of which, the Moneyflow Index is positive when the typical price rises, or of course, as we call it, as a buying pressure, and becomes negative when the typical price declines, or also called selling pressure. However, as we mentioned earlier, the easiest interpretation of this particular index is the Moneyflow Index. It can also be compared to a volume-weighted version type of the relative strength index. So you can see it is a relative strength index, but it's actually a volume-weighted. So that gives us a lot of new information that we can use further on when we're making our technical analysis. The big difference, however, between the two, the relative strength index and the volume-weighted version of the relative strength index, which comes the Moneyflow Index, is, of course, the volume itself. Because the volume is added to the mix, the Moneyflow Index will act much more differently than the RSI itself. A lot of theories suggest that volume leads price. This is not always the case itself. That's why the volume added to the relative strength index gives us more clarity on market momentum with just a little bit delay, so we can relax and see much further into the future of what we can expect. Basically, it's measuring much more larger scale of the price so far that you're looking at the candlesticks given as a price curve. So the RSI, as we mentioned, is also a momentum oscillator that already, as we say, leads prices. Incorporating the volume can increase that particular lead time, giving us more information earlier than the relative strength index. Now, let's have a look one more time of a normal relative strength index with, of course, the a little bit more different settings than the MFI. So we're going to go again to the oscillators again, the relative strength index. Right now, I'm actually going to remove a lot of levels here. I have not preset it, this particular instrument, so I'm going to delete these levels and this one and this one. I'm just going to go the 50 level. This is the middle level that we usually need, and this is pretty much where the prices are starting to turn over. And we're going to be looking at something like this. Sorry, I didn't manage to change the parameters here. We're going to use a period of 7, and of course we are going to use a different color based on the fact that on these two instruments here, ladies and gentlemen, we are going to input some more other indices or instruments that we can rely on to give us on time good trading signals. This is all we're focusing on. However, let's focus on a little bit more information, basically on the conclusion on the Moneyflow Index before we get back into our trading chart so we can have a look at the rest of the instruments that we're going to use today, their settings, where exactly they're going to fit in our puzzle here, so we can receive those trading signals that we need. As we mentioned, that the Moneyflow Index is a rather unique type of indicator combining momentum and volume along with the formula of the relative strength index. It generally favors the bullish market when the indicator is above the 50 level. However, we're not using that 50 level here, not right now, because I'm going to use it with another indicator, so they don't really overlap. And you're going to see how it's going to look a little bit later. And of course, when we speak about bearish market, when it comes below that 50 level. Of course, anyone can measure with the crosshair where pretty much the 50 level stands. And when we see that when the curve falls below the 50 level, we're witnessing a bearish market. When it goes above that 50 level, we're witnessing a bullish market. Not in all cases, however, with the Moneyflow Index, we're witnessing such cases. And those are the particular moments where that system is going to protect us from making mistakes. How is that going to happen? This we're actually going to be doing by using more indicators on top of these that we have already. Now, on top of the Moneyflow Index, let me shrink this a little bit, open the navigator bar here, or navigator window on the left side, and what we're going to use on top of the Moneyflow Index, as we can see, it's a pretty delaying one. That means we need something faster, and that from our system we're going to use the Stochastic Oscillator. Now, given the fact that it's also a momentum oscillator, the stochastic is rather faster than the relative strength index and the Moneyflow Index. I'm not using the RSI with the stochastic on top of each other because the accuracy of those signals drops below levels of 50, and we need it to be a bit more accurate, basically to filter out those negative signals out of our system. Now, given the fact that we need only the main line instead of the signal line of the stochastic oscillator, I'm going to take from the properties the color of my background here and just transfer it on top of one of the lines which we don't really need, and this is the signal line. So I'm going to just paste it over here. I'm going to take the red line because it makes a better contrast with the MFI, and make it just a little bit more thicker so we can see that. And you can see there those curves are overlapping. Just a few other settings here that I'm going to make the style, the colors here of the Moneyflow Index, I'm going to make it white so we can have a better overview. The line also just a bit thicker, and this is what we see. Now, moving faster over the relative strength index, there is one last particular instrument that we're going to need, and it's also a bit slower than the relative strength index. So you see, we're using faster and slower indicators, one against each other, and faster and slower again on the bottom. However, the commodity channel index, as we can find it over here, we're basically looking at as a just very, very, let's say, much slower, but not too much. Enough for us to get something like this. We're giving a period of 21. The levels are preset, parameters already done, and this is what we're getting. Okay, the colors here are not exactly up to my liking, so I'm just going to go for some lighter blue here so we can better see it on the background. A bit more thicker lines to have it as a better visual and a much better experience. Pretty much that's all we need so far. Now let's zoom in a little bit and see what we're looking at. Ladies and gentlemen, now we have a full set of indicators on our system, basically our 4 main indicators that we need to form a beautiful trading system. How are we going to use it? Of course, that's just another matter of time to get it more clear. See here, we have the so-called commodity channel index, just very tiny points slower than the relative strength index, as you can see. But they're basically moving in one direction with very few differences. And that's almost because of the particular settings that we've put. The relative strength index is with the period of 7, the other one is with the period of 21. Even if we go with the period of 7 and 7, the commodity channel index is still going to be faster, and we don't want that. We need it to be a little bit more delayed in time to give us more clarity of, let's say, what the price is up to and when that particular momentum is on its exhaustion levels. Whether it's down in the 0 level or above on the 100, it's still up to an end. It's just a difference of whether it's bullish or bearish momentum. So to speak, in the same matter, we're looking at the Moneyflow Index in white with period of 13. Also, I had to preset these parameters. That's why they're looking a little bit more different to me this stage. It have to be 533 as an input, and we're getting a bit more extremes here and a signal that comes much more faster than a delaying indicator. Now, speaking of signals, the one thing first we need to take a look at is our crossover of the Moneyflow Index with the stochastic main line. Not the signal line, the main line. This is the one that we actually need, nothing else. This crossover marks the beginning of our directional move. But what we need to see here is the direction of the other 2 indicators. They're also pointing down. So this is rule number 1 and rule number 2. This is all we need, ladies and gentlemen, to see a very pretty trade further on in the future. How we're going to take our profits and our stop losses later on in the session. Right now, I just want to take my cross here and see what we actually have. In the beginning of these of the crossover here, that's the first indication of our directional move. Now, we don't necessarily need that 50 level on these 2. However, it's always good to have it. I'll tell you why later. Let's just preset it first. Is the particular crossover, where it appears and what it means. What we need to see is a crossover below that 50 level. It's clear that it's happening below that 50 level here when we already have our extremums. For those that are going to use the system in the long run, they should actually try to use it even without that 50 level. So they can take a brief glance and see where exactly the crossover is. Take a look at the direction of these 2 indicators here, the commodity channel index and the relative strength index. See if they're pointing to the downside and not pointing up, for example. Then we're going to have our perfect signal. It's the same case here. Now, we're having our a crossover below that 50 level, but our indicators are starting to point to the upside, which doesn't necessarily mean that our downside is not going to occur, or maybe the direction could be up. It mostly means that it's not the time to enter. It is too early to suggest a directional move. Why is that? Because we can see another crossover that points in a different direction, another one here, and we can see how our indicators are pointing differently. Now, what if that move continues up? We will definitely lose money. So the creation of this system allows us to be protected from those kinds of moves, ladies and gentlemen. We don't need those false signals. We only need a case of which our faster indicators are pointing to a momentum that it's building to the downside and a signal that it's telling us now is the time to enter. Our exit comes when the two indicators down here, the relative strength index and the commodity channel index, starts turning to the upside. And most of all, I would take my exit when any of these, they basically both will cross that -100 level here. That is why we don't need any other levels of the relative strength index here, because they will just interfere with our main objective, and this is not what we need. We need to take the full potential of that trend, but when it comes to reverses, this is a different case. Now we have our crossover here, and looking at the 5-minute chart, we're going to enter on the next one. Despite what everything else is saying, that it's in overbought conditions, we're going to take that case down to over here on that particular candle. Of course, we're not always going to be able to catch that bottom, but that's not our main objective. Our main objective, ladies and gentlemen, is to exit precisely at the time when the market is making that reversal. Whether it's going to happen over here or further on in time, that doesn't mean that we need that. We don't really need that. We only need to know where to exit and when to enter our next position. So far, what we are seeing is that our system is not pip-based system on profits or stop losses. It's actually indicator-based. It was the same case with the accelerator oscillator and the awesome oscillator that we saw this week on Wednesday. We spoke about a system that could be also pip-based or an indicator-based. This one, however, is strictly indicator-based system. Now let's see in that exit point of time what the market is and where it is. Now we're gaining about 35 pips or 354 baby pips, or 35 pips in general. This is $350 in dollar lot of profit. This is about 2.9 hours, or let's say 3 hours, which gives us a pretty good profit in a matter of 3 hours. Now there is a $350 of profit, but what is the next thing that we can see? That system gives us not only an exit, but also an entry. From this point, we can also start looking for that crossover, which is protecting us one more time. If that crossover happens below the $50 level, the 50 level here. If it happens above it, then we can take our long positions. But if it happens below it, the market is protecting us from all of this particular hesitant move here on the sidelines. Basically telling us there is more downside, but we don't know when exactly that will happen. Okay, now the next thing that we see is another crossover which happens below that 50 level. Our indicators here are still pointing to the upside, and we can still see that the market continues with the same particular case throughout the whole time. Here, however, you can pretty much see the crossover is just above that 50 level. We might take it, we might not take it. I wouldn't take it if I were you, even if all the conditions are met, simply because in some of these cases the moves are extremely light, basically the so-called unsustained trend. And as we can see, this is about 10 pips in 3-4 sessions. That's not worth it. We better look for something else. And as we can see, the market is changing direction, so we have to exit, and that's about $100 in 3 sessions, which may not worth our time and effort to see whether we can continue this way. But let's have a look at what is happening later on here. We also have, as we mentioned, earlier indications of a downside, which we're going to avoid because of the conditions of these two. The relative trend index and the commodity channel index are pointing to a different direction. The preferable way to trade this system is always when we have a crossover like this one. Okay, let me stretch this one so we can see it better. Crossover like this one here with the Moneyflow Index and the Stochastic Oscillator, and a decline, no matter if the decline is from the top or from the middle somewhere there. It's still the same condition. We have our entry conditions met and our exit when the market starts moving against us. This is about 4 pips. But as you can see, marked here with the direction of these is our exit. So basically the system is not going to fail you, but it does mean with how many pips your profits are pretty much going to be. Whether 4 or 5 pips or 10 or 100 pips, it really depends on the market. And when we speak about 5-minute charts, we can expect a whole bunch of variety of different pip profits. When it comes to stop losses, our stop loss have to be always when the market changes direction by the same way of our stop loss of our take profit. So it doesn't matter if when the market gives us a potential move that we manages to take about 4 pips of profit, or let's say when the market changes direction like here, okay, and you didn't manage to exit on time, you always have to exit no matter of how many pips. And in this case, it's just about 2 pips of loss. $20 on the lot. It's not worth waiting for an additional $70 of loss in order for you to get the meaning that actually the market is not going to push higher, and you get the proper signal with an exit straight over here, as we spoke just a few minutes ago, to collect that particular 35 to 40 pips of profit, worth about $350 to $400 of profit. This is only just a few cases. Let's move a little bit further back. Taking a look at a bullish position here. There it is. Our crossover is just a little bit up from that 50 level. And as we can see, our relative trend index, commodity channel index pointing higher. We're taking our case up to here. And our exit is pretty much somewhere around over here when our relative trend index and commodity channel index are pointing down, breaking from the 100 level down. So this is about 8 pips of profit. It's about $80 on that lot. Still worth taking. Speaking of 5-minute charts. Also, this is another case where the system could give you a false signal, because this one might even retreat higher. So even if that particular a possibility here could be at hand, one more time, that's about 6 to 5 pips, nothing that we need to take. But when it comes to bullish positions, one more time, this is also another good case here, which gives us a little bit more profit. We can see that crossover, bullish crossover to the upside above that 50 level. And we can see the upside of the lower indicators, commodity channel index and relative trend index. And what we can see is the break point somewhere around here, just about 10 pips of profit, or $100, somewhere around here when the both indicators, commodity and relative trend, are breaking down the 100. So as you can see, there are a lot of cases on that 5-minute chart where we can rely on this particular indicator to give us very quick, very neat profits. Again, one more, like this one over here. It's about $200, $170 worth of profit, somewhere around here, as you can see. Let's take a look at another case that is worth our time. Now, why I'm saying that I'm not taking these conditions, okay? That's a very long run. It's a very good run, but it's not above the 50 level. This is what we need. And basically, because that's 5-minute charts, you're going to have maybe 20, 30 trades on one and the same currency pair for one day. So during that time, you will face a lot of cases like this one, where they will actually fail. And let's take a look at a case, which is exactly that one. We have our particular crossover here. We can see both indicators are to the upside, but the crossover is not on the 50 level. The next time over here, when our relative strength and other crossovers occur, are over here. So this is a failed position. Another case from here that delivers the same particular move that could actually take about 5 to 6, 7 pips of profit is this one that you might be able to profit. But if it's not a case where we can rely on this system the proper way, like this one, for example, from here to here, very quick profit, 4 sessions, 10 pips, worth $100. Let's check for another move like this one. We have that crossover happening exactly on the 50 mark over here. Everything is pointing down. The crossover is at the 50. These are pointing down, and our exit comes over here when we have a clear breakover of that minus 100 level, and that's on the bottom. This is worth $150 in 20 sessions, 25-minute sessions. So you see, you might exit over here or somewhere in the next few sessions, which is pretty much definitely going to depend on when exactly the market is going to close, when would be the time that you will actually see this to act as fast as possible. So cases like this one, ladies and gentlemen, they tend to finish very quick. Pretty much that's going to be a very quick profit, $20, $30 worth of profit. Also, let's have a look at this one, this case over here. Our break point and the return is somewhere around here, which also gives us about the same amount of profit. Also, another good case of failed direction is somewhere over here. You're going to be moving at a sidelines for quite some time until the market decides moving higher. But the most accurate readings of the system I will show you on our 15-minute chart, starting from the beginning. As I mentioned, this is a system that can act pretty well on both 5 and 15-minute charts, as well as something larger, but with a few different tweaks here and there. So what we're saying is that we only rely on the signals that we receive from the system, with no exception. It doesn't matter if the market gets a crossover in a direction and a strong volume over here, we're not going to take it. This is not what we need. We need a case like this one. Strong direction to the downside, crossover before that. All of this will bring us, let's say, somewhere around here, $180 in about 4 sessions. Now this is 20 minutes worth of your time to collect that particular profit. Now, if I were you, I would definitely stick to that particular system and the rules of it, without any exception. As we can see, also the same case, $130 of profit, pretty fast, pretty good, and we are definitely going to ignore cases like this one. Direction to the downside, but the crossover is above the 50 period. The 50 level of the so-called stochastic or the money flow. They're pretty much on the same level, so that's up to us to decide. And there it is, also a very, very good example on the 15-minute chart. We're taking about 7 sessions worth of nearly $300 of profit over here. So this is a very neat, very powerful trading system that protects you from making mistakes. Because one more time, in a case like this one, when we're seeing the crossover slightly just above the 50 level, okay, it is going to give you some kind of profit over here, but how about if you use it about 6 months or 1 year time and you still rely on these exceptions here, which I do not take for granted. By the way, I'm learning from these mistakes and I'm trying not to do it. Therefore, a crossover right at the 50 level is pretty much the most perfect one, because it gives you a continuous downward movement without any hesitance like this one. You see? Do you see how for how long the money flow index stays above that 50 level without falling down? And it starts falling from here. So the crossover occurs on that large bar or large candlestick here. In your entries from here, then you have a whole session of a hesitant market before you actually consider to make some kind of profits. And this is only one case. If I keep scrolling back, you will see a whole bunch of cases where this case will fail. You will see a bounce off of these levels and a continuous movement to the upside. And that's why this is not what we need. But a case like this one, where the crossover is perfect, happening above that level, all right, and then our entry point somewhere here and our exit somewhere around these candlesticks, depending on your particular RSI and commodity channel index, which could happen somewhere around here, and you're quickly collecting about $100 within 8 to 9 sessions worth of 15 minutes of your time. Let's have another look at a case study like this one here. We have that crossover from that first candle. From our next one, we can rely on this system to take us down here if you're willing to wait, or you can just exit somewhere around here when the relative strength index and the commodity channel index are bouncing off the 50 area and trying to push even higher. So these rules have to be considered when you're trading the system. Let's take another look. If we can quickly find something that can give us a good signal, like this case, for example, on the 15-minute chart, the money flow index crosses over the stochastic oscillator. From somewhere over here, we're entering, as we already know, the direction is downside from the commodity channel index and the relative trend index, giving us a pretty good $450 worth of 13 sessions somewhere on the bounce off of this level, or pretty much the same amount of pips somewhere around here when all of this breaks off. You can see 40 pips, that's about $400 in even half the sessions. So what I'm trying to say, ladies and gentlemen, is the accuracy of this system allows us to be accurate on the signal, on time to enter, and accurate on the signal to exit when the market is starting to reverse. That is why the title of today's session, Trend and Reversals, gives us not only in a lot of cases the opportunity to trade trend reversal, because there are a lot of V cases, you know, V-shaped chart patterns that can actually bring us back to the same level up here, with an opportunity, if the crossover occurs somewhere above here, to get pretty much the same amount of profit for the same amount of sessions. That's all about it. Nothing complicated. Also, let me just mention another case of a possible fail, and as I mentioned, how our fail-safe is triggering here. Now, when the crossover occurs on the 50 level, here we can see an upside from the other faster indicators, RSI and CCI, where we can see full upside move before we actually start seeing that downside. Or in this case, I would say you're pretty much going to hit a few pips of stop loss, or just about a few pips of gain or break even. So the accuracy and the stability of the system gives you a lot of profits, a lot of frequent profits, given the fact of the smaller time frames that we're trading on, and very few stop losses that could be hit, because nothing is flawless. That's all about it. Next month, ladies and gentlemen, you can start signing up for new webinars for October. There's going to be a lot of new interesting things for you over there. And of course, if you have any questions, you can always go to the website. On the bottom right corner, you will see a pop-up chat. You will ask your questions over there. Our support department will make absolutely everything on 100% sure to answer as quickly as possible within minutes. And if you request a one-on-one session with me or any other of my colleagues, we can always oblige to that request. That's all about the session of today and this month. It was a great pleasure again to present new systems for you. For all of the questions, you can always call us on our telephone lines. And if you have any recommendations, or if you like us, or if you want to rate us, go to our Facebook, Twitter pages so you can do so. Thank you very much for joining us. I'll see you next month. Once again, it was a pleasure. See you next time. Bye-bye.